I now want to talk a little bit about some of these earnings plays. We had some neat post-earnings trades today. So let me show you this. Let me spend a little time with the intraday charts because I feel like this can help you trade the rest of earnings season. And I know not everybody trades during the day. Not everybody's watching these patterns, and that's okay because you can still learn from the intraday chart, right? The same pattern we're seeing on a 5-minute chart, you can use those same patterns on a daily chart as well. So even if you don't day trade around earnings, it's all right. You're going to look for these same patterns, but you're going to look for them on the daily chart to develop, okay? All right, so Goldman Sachs, they had earnings. This is, I mean, honestly, this is probably my favorite one today because they announced earnings pre-market. Their earnings were spectacular. Let's just jump over to the intraday chart. If you guys were in the free online class today, I spent some time going through this, so I hope you don't mind if I repeat it, but I want to make sure everybody sees this because it was just such a great pattern, and it's one that I've traded a million times, and you're going to trade it a million times again if you watch for these, so don't underestimate the power of backing these charts up. But what we have here on Goldman Sachs, they announced earnings. All I know is I got the CNBC alert that it was better than expected, and look, and Goldman Sachs is gapped down. And it gapped down to what level, guys? Look at the daily chart. It gapped down to the 10 exponential moving average. And the first 5-minute candle is wild. Long wick at the top, long wick at the bottom. But that's pretty typical post-earnings. What that's telling us is there's just a lot of uncertainty there. Okay, so there's also a pivot point right there. So you've got a lot of volatility, a lot of uncertainty, right to a 10 moving average. Next, let me do the playback here. Oh, shoot. I can't click. I have to remember I cannot click on the chart. Hang on a second. When I'm doing this playback, if I click on the chart, I mess it up. Jump to the first 5-minute. Here we go. I'm going to play back minute by minute. It's gapped down to a technical area of support on the daily chart. But it's also gapped down. It could go lower. We don't know. This is exactly why I wait for a breakout of the first 5-minute candle, and I'm looking either for it to drop lower or turn bullish or bearish engulfing, basically. So the next minute in, it is already bullish engulfing. Remember how I said a lot of times I'll let that 1-minute candle close? I don't jump in the very second. I let it close, and then if the next candle's going higher, that's our entry. So let's see. I go forward the next minute. There it is. We're in. And by the end of that 5-minute candle, look at that explosive, powerful move. And there were all the reasons in the world to get in right there on that candle. So just change the playback now. I'm going to just walk forward 5-minute candle by 5-minute candle. So you've got a bounce off of the 10. You've got your first entry on that second candle in right here. You've got another opportunity on this candle as well. 2 candles in. After that, I don't like pushing it because it just, options get inflated, and I don't want to be the last one in. I don't want to be the last one to the party. So Goldman's pushing up. Little consolidation. The consolidation took place above the bands. You guys who were in the online class today, I pointed this out, and I said, look, there's 2 consolidation candles. This stock has gone from above the band right to the top of that upper Bollinger Band. This is enough for me as a day trade to tighten my stop right to the bottom of that red candle. It's not an exit yet, but if the stock drops, you need to get out because we've had a 5, 10, 15, 20, 25-minute upswing move, and now it's slowing down. And that's a good amount of profit right there. The entry around 157 and change. This would be an exit around just below 161 and change. $4 move. That works. But the next candle, what happens? It pushes higher again and completes a rising 3. So you're still in the trade. But this is a little weird. It pushed higher and immediately moved into the band. So it's showing another sign of slowing, a little bit worrisome, but okay, it's pushing up again. It's trying. Still in the trade. I want to see it push above the upper band, and it doesn't. When it turns bearish engulfing, this is an exit. By the way, I know some of you subscribe to my Chart Watch alerts, and I'll send out alerts just kind of from time to time on some patterns that I find interesting. And I sent one out. Let's see if I can back this up. Okay, right here. I liked it, but it was slowing, right, because it's inside the band. So on the next, I'm going to play it back minute by minute. The next minute, it's pushing higher, still good. The next minute, pushing higher again, still okay. Next minute, trying. Next minute, there. As soon as it turned a little bit red, I sent out an alert saying, hey, watch out, because this could be, this is a developing Bollinger Band top, which, what does that mean to you if you have calls and you're trading after earnings? You know, trading right after earnings is usually a day trade. In the case of Goldman, it could be a longer trending trade as well, by the way, because it is right at a moving average support. But if you're treating it as a day trade, yeah, Marty, absolutely right. This is an exit. It's time to get out. If it turns bearish engulfing, you're both saying that means get it out. If it turns bearish engulfing below this green candle, you get out, especially if you have this week's options. And there it is. That's your exit. Right there, out of the trade. Now, in the class today, there were some people that were saying, hey, they did that and then traded the fade into lunch, which is that other strategy that I teach. And it's not always there. Here, let me just go current. Let me show you what happened. The fade into lunch is not always there, but when it hits, it's awesome. So backing this up a little bit, that entry that I just showed, or the exit, I'm sorry, when it turned bearish engulfing is right here. Below 163. This is it, where my mouse is pointing. That was our exit. How cool is that? I'm not telling you you're out at 163 and change at the very, very peak. You didn't catch every penny of that trade. But if you trade the way I teach you, you would have caught most of them, wouldn't you? That's what this is all about. Take the pressure off yourself of trying to be perfect and catch every penny. Get a chunk of the middle of these moves, and you will have plenty of money. Right? That's what you need to look for. Get a chunk of the middle of these moves. So here we have bearish engulfing. That's our exit. The fade into lunch is best done when you have a stock that has moved really well up or down in the morning, and then we move into the middle of the day where things often go slow and sideways. If the stock has been super bullish, before it goes sideways, a lot of times it pulls back and sells off. And just like this, super bullish, and then it pulls back and sells off before it starts going sideways. A stock that's been super bearish, by the way, a real strong sell-off in the morning, a lot of times will rally a little bit.